Powerful corporations and extremely wealthy people are taking advantage of a worldwide system that is rigged to prevent them from paying their fair share of taxes, according to a vast amount of papers that would have come to light since 2014. The most vulnerable populations in the world suffer as a result. Wealth is abundant in our world. Are you curious about the relationship between taxes and poverty? Make sure you stick around until the end of the video to get all of the details. And whilst you're at it, give us a like and slam that subscribe button like it's a booming economy. It's no secret that the gap between the wealthy and the impoverished is only growing wider. In fact, as of 2015, the top 1% of earners now hold more wealth than the rest of the world combined. But what's driving this tremendous economic inequality? The answer is tax avoidance and evasion on an unprecedented scale. The rich and corporations continue to dodge taxes, using tax havens to do so in secret, while millions of people around the globe struggle in extreme poverty. This not only hurts individuals, but it also prevents the world's poorest nations from being able to provide basic services to their citizens. It's time to level the playing field and ensure that everyone pays their fair share. The Internal Consortium of Investigative Journalists, ICIJ, has released a sizable amount of papers since 2014, including the Panama Papers and Paradise Papers revelations, revealing how tax cheating and avoidance have evolved into common business practices around the world. Rich people and multinational corporations deliberately work to grow their earnings by keeping them elsewhere and evading paying income tax in their home countries through a convoluted and weakly controlled tax system. The great winners are powerful, affluent people and multinational corporations that leverage their position and power to benefit from the economic arrangements and earn financial gain for themselves. Instead, those who ought to be paying the most in taxes increase their earnings in part by paying the least in taxes. In order to achieve this, they either use tax havens or force nations to compete by offering tax advantages, exemptions, and reduced rates. While certain tax evasion techniques are unlawful, many others take advantage of flaws in the current tax system without breaching the law. Have you ever done something like this to avoid taxes? Don't worry, we've all been tempted at some point. The top 200 firms in the world make up 9 out of 10, and between 2001 and 2014, corporate investment in tax havens quadrupled. While the 20 largest European banks reported nearly a quarter of their revenues in tax havens in 2015 alone, or an estimated 25 billion euros, the 50 largest US firms buried $1.6 trillion offshore. Rich people and multinational organizations can avoid paying taxes in the nations where they conduct business and earn their income by hiding their riches in tax havens. They deprive governments of the funds necessary to provide essential public services and infrastructure such as hospitals, schools, and roads, as well as to combat poverty and inequality. Governments must either reduce the amount of these services they provide or raise taxes on everyone else to cover the difference. The poorest people lose out under both scenarios, and the inequality gap widens. Hold on, are you part of the 1%? Yes, the 1% of our viewers who are subscribed to Proactive Investing. If not, now's the time to join the club and subscribe. Let's make a goal together. Let's up that number to 10%. Trust us, you won't regret subscribing to Proactive Investing. Now, let's dive deeper into the topic at hand: how taxes can make the poor poorer. Every year, corporate tax evasion costs poor nations at least $100 billion. This amount of money could educate 124 million kids and avert the annual deaths of 8 million mothers, infants, and children. Due to the super rich exploiting tax havens, Africa alone loses $14 billion in tax revenue. With this much money, 4 million children's lives could be saved through the healthcare, and enough teachers could be hired to ensure that every African child attends school. There are different tax laws for the wealthy and large corporations compared to the general public. Ordinary residents are forced to foot the bill for the government spending, while the wealthiest people escape paying little to nothing. If we want to address excessive inequality, we must urge global leaders to put an end to the tax haven era and an end to the secrecy that allows wealthy people and multinational corporations to evade paying their fair share of taxes. Hospitals, roads, police, and schools are necessities for everyone, but they are costly, and governments all around the world are feeling the strain. So, how can we continue to provide high-quality public services in the future? People are getting older. Working people will be required to contribute more taxes as the number of pensioners rise in order to support them. The price of healthcare will increase as medical technology advances. But where can I get the money? Basically, there are 3 things that governments can tax: income, consumption, and wealth. Over the previous 50 years, income taxes have, in fact, increased. Low-income nations like the UK typically have better economic growth. consumption comes next. For example, in America, sales taxes, and in Europe, value-added taxes on goods. One issue with consumption tax is that they disproportionately affect the poor, who spend a larger percentage of their income on recurring items. Finally, there are wealth taxes. Instead of taxing income or consumption, this may be a preferable option. This is in part because it imposes a greater tax on assets than wealthy individuals own, such as real estate and investments. The issue is that politically, taxing wealth is difficult. For example, homeowners will be outraged if their property taxes are increased, but funding for good government services is necessary. Americans might anticipate efforts to tax the richest citizens' wealth in the upcoming months. There are 4 frequently cited arguments in favor of such a measure. Rising inequality necessitates restoring fairness. Exploding deficits demand more funding. Taxing the richest is the least dangerous way to do so. Extreme wealth disparities hinder economic growth, and since the wealthy use their wealth to influence politics, democracy necessitates leveling the playing field. Over the previous 4 decades, from 1978 to 2016, the percentage of domestic wealth held by the wealthiest 0.1% of Americans increased from 7% to 14%. The wealthiest Americans are typically self-made business people. 8 of the top 10 wealthiest Americans, or 67% of Forbes' 400 richest people in the country, are all self-made entrepreneurs. There is little proof that decreasing income disparity will boost economic growth. Due to the inherent difficulty of measuring wealth taxes are both inefficient and ineffective. For instance, privately held businesses lack stock value since they're not traded on open markets, making it impossible to determine their value. In addition, with the click of a mouse, financial assets can be concealed, transferred abroad, or changed into other challenging goods. The only countries that still impose wealth taxes today are Switzerland, Norway, Belgium, and Spain, and their rates at 0.3% to 1%, 0.85% to 0.15%, and 0.2% to 2.5% respectively. Switzerland's wealth tax generates the largest revenue, but it only accounts for roughly 3% of total tax receipts. Every tax has an effect on how individuals behave, and these distortions can be detrimental. When capital is not allocated to its more beneficial uses, it typically has unintended repercussions because it distorts the returns from risk. Because it has so much to circumvent these taxes, income, and consumption, tax rates must be relatively high to deter work or spending. However, wealth taxes are thought to cause the most distortions of all, because they reduce return on these actions, interest rates, even though when they're low, discourage saving and investing. Well, that's a wrap for today. If you've enjoyed the video, then don't forget to give it a like and a big thumbs up. And if you want to stay up to date on all of our future content, make sure to smash that subscribe button like it's a booming economy, and turn on the bell icon to get notifications whenever we upload new videos. We'd love to hear your thoughts on taxes causing inequality, so comment down your thoughts below. If you're hungry to learn more, be sure to check out some other videos on our channel. Thank you for joining us, and we'll see you next time.